Hi, I'm going to be looking at some banking numbers today, but before we get into those, please like, share, subscribe. Every time you do so, every time you interact, it helps take this content to a wider audience. So that is why, especially in the first few minutes that a video drops. So as soon as you see it, and that's the essence of notifications, like, share, subscribe every time you do so. Thank you for doing so. And I must also use this opportunity to say thank you to the 2,300 plus people who have signed up to this channel, to the 100 plus people who take out time to watch on average every video that goes out. I truly appreciate you. I don't take it for granted. In a world with an avalanche of media, in a world where data is expensive and time is truly expensive, every time, every second you spend on this channel is greatly appreciated. A disclaimer: we are talking finance, we're talking numbers, so this disclaimer is key. This is not investment or trading or personal finance advice. My views and the views of the team are subject to change at any point in time without notice. Analysts on the team may or may not have a position in any of the stocks discussed. Past performance is no guarantee of future performance. What are the Fugaz banks? That's what I'm going to be looking at today. Fugaz is an abbreviation for Firstholdco, UBA, GTCO, Access Corporation, Zenith. They are the five biggest banking institutions in the country, at least commercial or private institutions, you might say. Governments, maybe the government may have a few bigger than that. I mean, obviously, and all that. So let's get into the numbers. But what is 9-month 2025? A calendar explanation. 9-month 2025 means the first 9 months of 2025 for these firms. That's between January to September 2025. And so it comprises 3 quarters. A quarter is 3 months. And so you say first quarter January to March, second quarter April to June, third quarter July to September. All these numbers are available on the NGX website, corporate disclosure section. Search for these companies, go to the company page and you find the numbers. So my focus is on 9 months. For a deeper dive into each of these firms, you want to watch out on Spotify. I'll be taking them one by one. It's a busy week, and I've been saying so, but truly it's a busy week. So you want to follow on all social media platforms. All the links are in my bio on YouTube. At the Fugaz 9-month 2025 numbers, we start from the top. In terms of gross earnings, who led the way? Access Holdings led the way. Now, some math. All figures are, you see, are in millions. So you add 6 zeros behind these figures except GTCO numbers. GTCO numbers are exact numbers. So Access led the pack in terms of gross earnings, 3.9 trillion naira in gross earnings. Who led the pack in terms of profit before tax? Zenith Bank led the way with 917 billion naira in profit before tax. Which firm paid the most tax? GTCO paid the most tax. That's 201 billion so far paid as tax 9 months 2025. Which firm led in terms of profit for the year? You have Zenith Bank taking first place with 764 billion in profits after tax for the 9 months ended September 2025, closely following GTCO with essentially 700 billion in profits after tax. Last is Access Holdings, and that's quite poor, really poor. Because for a bank, I mean, the laggard usually for these 5 banks, Firstholdco is usually the laggard. So it's not, I mean, it's not nice. I guess Firstholdco shareholders may be happy that they're not lagging or they're not laggards. But for Access Holdings, this is a sad year. These numbers are poor. Let's look at earnings per share or profits per share. GTCO took a first spot, and clearly, and I've stripped out some numbers from this table. I stripped out the number of shares, I stripped out assets, liabilities, equity, which is what I use to calculate book value, just to have a smaller table. And if you want some more details on all those assets, you want to check out the H1 numbers I did on these firms, you can scroll through the channel, you check for H1 numbers, check company analysis, and you find the numbers there. Earnings per share, 9-month earnings per share, GTCO led the way with 20.71 in earnings per share. For Q3 2025, which firm led the way? GTCO led the way with 7.54 in earnings per share. I have extrapolated and assumed that if you have Q4 coming as Q3, my estimate for full year earnings per share for the ways you have GTCO leading with 28.25 naira earnings per share. You have Zenith second place with 24.24 in earnings per share. Smallest of them is Access Holdings with 12.28 in earnings per share. You must also, in considering this, and do that in your own research, go look at the outstanding shares for each firm. I think Access Holdings has the largest number of outstanding shares. So outstanding shares, you divide the earnings per share is what you get when you take a profit made by a firm divided by the number of shares. I think Access has the largest number of shares. So you do that in your own maths. It's important. You must do your numbers. I think I've given enough explanation on that. Let's go look at price to earnings ratio. And my assumption, if full year earnings come in at those numbers based on its current share price, Friday's closing price, what do we have? GTCO are trading about 3 times earnings. Access Holdings, smallest, the cheapest in terms of price to earnings ratio, 1.7 times earnings. I mean, if you want to be a bit simplistic in looking at these numbers, and you assume, and you'll be correct in doing so, assume that this firm should be trading at where the average PE of the NGX is, which is 8 times earnings. That, by the way, is not expensive. A market at 8 times earnings is not expensive. So if you use an 8 times multiple and simply take its earnings per share, the full year earnings per share, multiply by 8, what do you get? I mean, those will be crazy numbers, because you would have GTCO 20 times 8 is what, 160, 8 times 8. So you have GTCO at over 200 naira a share. Those will be huge numbers, but they will not be overly expensive numbers. But even if you want to say, look, each firm should be trading at 5 times its earnings, you could take earnings per share, multiply by 5. What do you get? So clearly, it's elementary. It's not the core criteria you use in analyzing banking numbers, but clearly just by PE ratio, I think these firms they're all cheap. Even though you might say GTCO is the most expensive of all of them at the moment. But let's look at book value per share. Book value per share is a more accurate number. How do you get the book value? Strip liabilities from assets divided by the number of shares and you get book value. So which firm has the highest book value per share? Zenith, book value per share at 115.1. UBA, interestingly, I wasn't expecting this. UBA with book value per share of 113.6. I'm actually mildly surprised. And then you have GTCO. Really, GTCO book value per share of 92.4. But which firm is trading closest to its book value? What do you have? You have GTCO trading closest to its book value of 0.92. They're all cheap because they are all below book value. There is no reason why this stock should be trading below book value. And so even if you say this firm should be trading at 1 times book value, if the book value of these firms, take each number, you multiply the book value by 1, that is at book value. In any case, you might argue that being the top 5, the primus inter pares in the banking space, they should be trading at a slight premium to book value. Maybe 1.1 times book value, maybe 1.2 times book value. You pick your pick. Take your pick. And my pick, this is my pick on them. Clearly, I have Firstholdco UBA hold. I'm awaiting some more details on their capital raise, where they are. UBA concluded the rights issue some weeks ago. Firstholdco, I don't think they're done with their capital raise, so I'm waiting clarity on that as a hold for me. I mean, it's not expensive, but I would just like to have more clarity on that, so that would determine where to go from here if I was an investor. For GTCO, Access, and Zenith, gas banks, it's accumulate. Accumulate means to gradually build a position. Why is it accumulate? It's simple. Turbulent markets, we may see some more downward pressure at the moment. If that is the case, that's not the time when you go heavy. You go heavy when you have some fairly stable market. So clearly, these are my views on these stocks, and my views is not personal finance advice. Don't act on them. If you act on them, you're on your own. I didn't tell you to act on them. Do not act on them. Thank you, ladies and gentlemen. See you in the next video.